Property and Casualty Exam Prep Answers. Question 1. What does the law of large numbers allow insurers to do? Option A. Guarantee profits every fiscal year. Option B. Predict future losses more accurately. Option C. Insure against catastrophic events only. Option D. Eliminate the need for underwriting. The correct answer is option B. Predict future losses more accurately. As the number of similar exposure units increases, insurers can more accurately predict the statistical probability of a loss, which helps set adequate premiums. Question 2. A mortgage clause in a property policy. Option A. Protects the insurer from bankruptcy. Option B. Protects the lender's financial interest in the property. Option C. Reduces the insured's premium. Option D. Eliminates the need for a deductible. The correct answer is option B. Protects the lender's financial interest in the property. The standard mortgage clause protects the mortgagee, lender, by giving them rights under the policy, such as receiving loss payment and notification of cancellation, even if the insured violates a policy condition. Question 3. The fair rental value coverage in a dwelling or homeowner's policy compensates the insured for: Option A. Loss of personal property. Option B. Lost rental income if the property becomes uninhabitable due to a covered loss. Option C. Damage to a tenant's vehicle. Option D. Medical payments to a tenant. The correct answer is option B. Lost rental income if the property becomes uninhabitable due to a covered loss. This coverage, similar to loss of use for a homeowner, replaces the income a landlord loses when a covered peril makes the rental unit unlivable. Question 4. The term adverse selection in insurance refers to: Option A. The insurer's process of selecting the best risks. Option B. The tendency for those with a high probability of loss to seek insurance. Option C. A method of calculating life insurance reserves. Option D. The termination of a policy by the insured. The correct answer is option B. The tendency for those with a high probability of loss to seek insurance. Adverse selection is the tendency of high-risk individuals to seek insurance more actively than low-risk individuals, which can lead to higher than expected losses for the insurer. Question 5. Uninsured motorist coverage in a personal auto policy typically covers: Option A. Damage to the insured's car caused by a hit-and-run driver. Option B. The insured's medical bills caused by a driver with no insurance. Option C. Theft of the insured's vehicle. Option D. Damage to the insured's home from a car accident. The correct answer is option B. The insured's medical bills caused by a driver with no insurance. Coverage stands in place of the at-fault driver's missing liability insurance, paying for bodily injury to the insured and passengers. Property damage from a hit-and-run is typically covered under collision. Question 6. The duties of the insured after a loss are typically found in which policy section? Option A. Insuring agreement. Option B. Declarations. Option C. Conditions. Option D. Exclusions. The correct answer is option C. Conditions. The conditions section outlines the rules of conduct and obligations for both the insurer and the insured, including duties like providing prompt notice of loss and protecting property from further damage. Question 7. Which of the following is considered a speculative risk? Option A. A house fire. Option B. A car theft. Option C. Investing in the stock market. Option D. A liability lawsuit. The correct answer is option C. Investing in the stock market. Speculative risk involves a chance of both profit and loss. Pure risks, which are insurable, only involve the chance of loss or no loss. Question 8. An insurer's right to step into the shoes of the insured and pursue a negligent third party for damages is: Option A. Indemnity. Option B. Coinsurance. Option C. Subrogation. Option D. Arbitration. The correct answer is option C. Subrogation. Subrogation allows the insurer to recover the amount of a paid claim from a legally responsible third party, preventing the insured from collecting twice and helping to keep premiums down. Question 9. The penalty of a surety bond is the: Option A. Premium paid for the bond. Option B, maximum amount the surety is liable for. Option C, punishment for not buying insurance. Option D, interest rate on the bond. The correct answer is option B, maximum amount the surety is liable for. The penal sum or penalty of the bond is the limit of the surety's liability, the maximum dollar amount for which the bond is written. Question 10. In property insurance, at what point must insurable interest generally exist? Option A, only at the time of policy application. Option B, at the time of loss. Option C, when the premium is paid. Option D, both at application and at the time of loss. The correct answer is option B, at the time of loss. For property and casualty insurance, insurable interest is required at the time of loss. For life insurance, it is typically required at the time of application. Question 11. A homeowner rakes leaves onto a neighbor's property and lights them on fire. The fire spreads and destroys the neighbor's shed. The homeowner's HO policy will likely: Option A, pay for the neighbor's shed under coverage E. Option B, deny the claim because it was an intentional act. Option C, pay for the shed under coverage A. Option D, pay for the shed under the neighbor's policy. The correct answer is option B, deny the claim because it was an intentional act. Property damage that is expected or intended by the insured is a standard exclusion in liability coverage. Deliberately setting a fire, even if meant to be small, is an intentional act. Question 12. Which of the following businesses is generally eligible for a business owner's policy? BOP. Option A large automobile manufacturing plant. Option B, a small, family-owned bookstore. Option C, a bank. Option D, a 30-story hotel. The correct answer is option B, a small, family-owned bookstore. BOPs are designed for small to medium-sized, low-risk businesses like retail stores, offices, and small restaurants. Larger, complex risks need a commercial package policy, CPP. Question 13. A professional liability policy, errors and omissions, protects against: Option A, bodily injury from a slip and fall. Option B, claims for financial loss from negligent professional services. Option C, employee theft of office equipment. Option D, fire damage to business documents. The correct answer is option B, claims for financial loss from negligent professional services. E&O insurance covers claims arising from a professional's failure to perform their duties with the expected standard of care, resulting in financial harm to a client but not physical bodily injury or property damage. Question 14. An insured operates a small, unlicensed daycare in their home. If a child is injured, this would likely be: Option A, covered under the personal liability section of an HO policy. Option B, excluded as a business pursuit, requiring a commercial or business endorsement. Option C, covered under medical payments to others. Option D, covered under workers' compensation. The correct answer is option B, excluded as a business pursuit, requiring a commercial or business endorsement. Activities considered a business pursuit or the provision of professional services are typically excluded from personal liability coverage in a homeowner's policy. Question 15. The cost of an insurance policy is called the: Option A, deductible. Option B, limit. Option C, premium. Option D, consideration. The correct answer is option C, premium. The premium is the specific monetary price the insured pays to the insurer for the coverage provided. Question 16. Which of the following is covered under the personal and advertising injury section of a commercial general liability (CGL) policy? Option A, bodily injury from a slip and fall. Option B, a libelous statement made about a competitor. Option C, physical damage to a customer's property. Option D, an injury to an employee on the job. The correct answer is option B, a libelous statement made about a competitor. Coverage B, personal and advertising injury, covers offenses like libel, slander, copyright infringement, and false arrest, which are not physical bodily injury or property damage. Question 17. Which of the following is an insured's duty after a property loss occurs? Option A, begin permanent repairs immediately. Option B, discard damaged property before the adjuster arrives. Option C, protect the property from further damage. Option D, refuse to submit a proof of loss. The correct answer is option C, protect the property from further damage. The insured has a duty to mitigate further damage. Failing to protect property from subsequent harm, like covering a broken window, could jeopardize coverage. Question 18. Which of the following perils is typically excluded from a standard, unendorsed homeowner's policy? Option A, fire. Option B, windstorm. Option C, theft. Option D, flood. The correct answer is option D, flood. Flood, earthquake, and mudslide are standard exclusions on most property policies and require separate policies or endorsements, like an FIP flood policy. Question 19. An insurance contract is considered a contract of adhesion, which means, option A, both parties negotiate the terms equally. Option B, the terms are drafted by one party, the insurer, and the other party must accept or reject the contract as a whole. Option C, the value exchanged is unequal. Option D, only one party makes a promise. The correct answer is option B. The terms are drafted by one party, the insurer, and the other party must accept or reject the contract as a whole. Because the insured has no input into the policy language and must adhere to the terms written by the insurer, any ambiguous wording is generally interpreted in favor of the insured. Question 20. A contract where the insurer's obligation to pay is contingent upon an uncertain event, a loss, is known as what type of contract? Option A, commutative. Option B, dilatory. Option C, adhesion. Option D, unilateral. The correct answer is option B, alatory. An alatory contract involves an unequal exchange of value. The insured pays a small premium, and the insurer may pay a large claim, but only if a covered loss occurs. Question 21. A license may be suspended or revoked if a producer, option A, writes more policies than their colleagues. Option B, is convicted of a felony. Option C, fails to pay their own personal auto insurance premium. Option D, represents only one insurer as a captive agent. The correct answer is option B, is convicted of a felony. Committing a felony or any act that is grounds for denial is a common cause for license suspension or revocation, as it demonstrates untrustworthiness. Question 22. Which statement is correct regarding the permissive use clause in a PAP? Option A, anyone driving the insured's car is automatically a named insured. Option B, a person using the insured's car with their permission is an insured under the liability coverage. Option C, the policy only covers household family members. Option D, a mechanic test driving the car is covered as a permissive user. The correct answer is option B. A person using the insured's car with their permission is an insured under the liability coverage. Liability coverage extends to any person using your covered auto with the named insured's reasonable belief they are entitled to do so. This is permissive use. Question 23. Which dwelling policy form, DP, provides the most comprehensive coverage, often on an open peril basis? Option A, DP1 basic. Option B, DP2 broad. Option C, DP3 special. Option D, DP4 renters. The correct answer is option C, DP3 special. The DP3 form provides special open peril coverage for the dwelling and named peril coverage for personal property, making it the most comprehensive dwelling policy form. Question 24. A commercial package policy, CPP, consists of which standard components? Option A, one single form that cannot be customized. Option B, common policy declarations, conditions, and two or more coverage parts. Option C, only property and auto coverage parts. Option D, a BOP with an umbrella. The correct answer is option B, common policy declarations, conditions, and two or more coverage parts. A CPP is a flexible policy that starts with a common policy declarations and conditions jacket and allows the insured to add various commercial coverage parts, for example, property, CGL, auto, to create a customized package. Question 25. A manufacturer of a defective kitchen appliance is sued by an injured customer. This would be covered under which type of commercial liability exposure? Option A, premises and operations. Option B, products and completed operations. Option C, contractual liability. Option D, professional liability. The correct answer is option B, products and completed operations. The products hazard covers liability arising from goods manufactured, sold, or distributed after the product is away from the insured's premises. Completed operations covers liability from work performed.